Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin. Dennis is a little under the weather this morning, so he's not with us at the moment. He said there is a slight chance he could stop by at the end of the show, but he's fighting a stomach bug, so it'll be just Joel and I in the driver's seat this morning. And Joel's a little bit upset because he just found out that the Kentucky Derby favorite is no longer racing. So with that said, let's get to today's show. About 20 or so earnings reports we think are worth discussing. So we'll hit as many of those as we can. Have to talk about this Tesla offering this morning, the reaction to that. Maybe we'll talk a little bit about the Fed, and we'll talk financials when Marc Chaikin joins our show at 8:15. He is the founder of Chaikin Analytics. Joel, put aside the your sadness about Omaha Beach and what's happening here.
It's not really sadness here. You think you could do the whole show by yourself? Because
Exactly.
I got to redo my Derby article that took so long to do. Now we'll talk about the Derby tomorrow, but that's definitely some big news here. S&Ps are recovering this morning. We're up 3.5 handles at 29.2650. Your pre-market high comes in 29.32 1/4. That's a good level. That's right around your daily pivot. So we have to take that out to get more green on the screen. Pre-market low, pretty impressive here, 15.5 at 16 even was Wednesday's low. So we'll be keeping an eye. Good technical levels. Crude down $1, heading back towards that support at the $62 area. Gold breaking down again, down 11.90 at 1272.40. Support just under 1270 at 1267 area. Silver down 5.4 cents at 1467.5, and Bitcoin showing some green, up $65 at 5,360. So we got a lot to cover with earnings, but I guess everyone wants to start with Tesla this morning. News of an offering.
Yeah, 2 separate filings, one a common stock offering, one a convertible senior note offering. The common stock offerings for $650 million, the debt offering $1.35 billion. And Elon Musk has apparently expressed interest this morning in buying up to just under 42,000 shares for about $10 million. And the pricing they gave on the stock offering was $238.69 per share. Well, that's what Musk would be buying at.
Big volume here. Over 1 million shares have traded. So this is the real deal on the move here. Trading way above that offering price here. I think a couple things to look at. One is that maybe it's just a low offering, and shorts maybe want some of it, and it's a low offering. There won't be enough stock, so they might be able to increase the price a little bit. I'm not sure about that. Looks pretty set. It's trading up at the highs of the pre-market session, 247.40. Spencer, give us your theory here on.
Well, that's interestingly you brought up the shorts. I guess that could be an option. I didn't think about it before. This could be just short sellers loading up, just loading up. But what I think is, I think all you people buying it up right now, you're buying it to flip it at 931. That's what you're doing. You're buying to sell to the sheep, who I feel like. So I know you're not going to really get this analogy, but in Game of Thrones, the big bad guy is called the Night King, and he can raise the dead. He just raises his arms, and the dead rise up. I think Elon Musk is raising his arms, saying, "Followers, follow me. Do as I do, and buy my stock." And that's what he's trying to do with this.
And consulting with Triple D on this, the sheep, the honey badger stock. So we'll see. I mean, impressive move. $9 over that offering price right now. Continuing to trade higher above that former support level. So if you have some calls, I saw some people mention that they wish they could sell it. You can always sell the stock against that too, and bring it in if you have like the 240 calls, if your account is set up to do that. Basis the dailies. I like to see the daily chart here. You don't have anything until on the dailies here. I see a high at 246.68 at your 4-day high. So keeping an eye on 247. We are comfortably above that level now. On earnings day, where there was a lot of indecision, 259 was the high. This 47.63 was also the close on the day after earnings. So this is a price discovery here at 47.50. Like I said, 259. If they take it $21 over the offering price, then that would be insane. But this is what this stock does. It does the opposite, trading at the highs of the pre-market.
It does the opposite of whatever you think it will do. And he didn't actually buy anything. He just apparently has indicated that he wants to buy or is interested in buying. I'm not saying it's the same thing. But you know what this reminds me of? This reminds me of when Ken Lay at Enron told all the Enron employees in September of 2001 to buy as much stock as they could. I'm not saying it's the same thing, but this is just what it reminds me of.
Wait, Spencer. You were in second grade.
I was reading the LA Times in second grade.
There's no way.
No, but that's sort of like the vibe I'm getting. I'm not saying Tesla is a fraud or a zero. I don't know. That's what I thought of this morning when I saw that Elon Musk wanted to buy stock.
All right, I know Triple D's not on here. I don't know if he's listening, but I wonder if he's going to say, you know what, I'm washing my hands of the stock on this one. I'm getting a little pop off the lows, but we'll see. 247.50 is where we're trading. If it holds 240, if it holds these gains, it'd be very impressive. But Musk is showing confidence in the company here. This is something we talked about on Benzinga's pre-market prep a while ago with Gene Munster, and he did back off it a little bit. But I still think they just need to make a deal with like Ford's or GM to produce the cars if they truly have the technology to do it. Maybe that's what they're going to do with the money. But ramping up production is key. And if you are trading this long or short, we'll retouch on this stock at the end of the show and see how it's trading near the highs.
Yeah, great question. Go for the W. I too would like to know at what level Elon was buying at throughout his time.
Oh, that's right. I mean, if you want to put a stamp on that, I mean, it's higher. I mean, I'm sure he has some initial stock, but
of course.
Boy, just seems to ignore the news, but a little bit of a fade going on here. Still up 1257. Big volume here, 1.3 million.
I don't know. Trying to predict Tesla is a fool's errand, so I'm just not going to do it anymore. But okay, let's move on to the earnings, and that's one of the biggest movers on my scanner this morning is Zynga, and we talked about the video game stocks a little bit yesterday with Mike Olson, and we'll have Activision reporting tomorrow, and Zynga reported yesterday, and this report was good, or at least that's how the street is interpreting it this morning. Q1 adjusted EPS, 14-cent loss. Don't think that's comparable to a 5-cent gain estimate, so throw that out the window. Sales, $265 versus $325 million. So I don't know if those numbers compare or what, because those are huge misses. But they raised their fiscal year sales guidance by $50 million to $1.2 billion, and they see bookings at $1.45 billion. I don't know.
Big move. Biggest move for Zynga I think you've seen in I don't know how long here, maybe since 2014. Not a bad day yesterday, I guess, because this is a lower price stock that the red bar on the daily looks a little bit more pronounced than it is. Pre-market high comes in at $6.40, back 20 cents off that. Let's see, what was your high? Your high in 2014 was $5.89. I might have to go back farther than that to try and find some resistance here. Let me see what the prior month's high was. $6.36. There you go. There was your high in June of 2012. That coincides with your pre-market high. I like that level as resistance. Above that, of course, it could 6.5, 6 3/4, 7, but that 640 area is a big pop, 12% for the stock, and just leaking slightly here. In order to get to the top of yesterday's range, you got to fall all the way to 578.
And we talked about yesterday how at least Activision was looking for a reason to go higher. We hadn't talked about these stocks for a while.
It was quiet.
Take-Two caught the upgrade yesterday from Cowen, and this morning Zynga is getting an upgrade in line with this report from Baird to outperform. They're raising the price target from $5 to $8 on
And
Zynga.
when is Activision? After the close today?
Yep. Let me confirm that, but I believe it is after the close today. It is after the close today.
All right, then that stock is making a comeback here. We'll see if you're trading this off the report. See couple highs at 49. This would be on the monthlies, and then after that, things open up to the 51.5 area on a good report.
All right, let's go down this earnings list here because there's a lot to get to. Let's go to Qualcomm, probably the biggest report from yesterday. QCOM are reporting Q2 adjusted EPS of 77 cents versus a 70-cent estimate, sales of 4.98 versus $4.8 billion. So EPS and sales beat in the second quarter. For Qualcomm, their Q3 EPS guidance was light. Their Q3 sales guidance was in line. And that's all I'm seeing.
It's trading up. It's trading up 38 cents. The high of the move has been 88.63. That's a couple bucks away. Just quiet ranges over the last, I guess quiet, $1.50, $2 here. 88.22 was the high from yesterday. So we'll see if we can get near the, I call it just overall 88 resistance. I see an 87.98 high. So we'll use that. That's $1.20 away. Coming back on the downside here, double close 86.13, 86.37. So let's see if it goes red. Yesterday's low, pair of lows right here, trio of lows at 86. So as long as this holds at 86, the strong uptrend is still intact.
This pre-market reversal is interesting. What does that tell you about the potential?
About a Qualcomm?
Yeah.
It just means that people are just hungry for the stock. Shorts are still choking on it. So a little dip right here, anybody that shorted it on that news and then you had to gap up or whatever. So pre-market low 81.75. So I just take shorts in there. And anybody that had this thing short, over the last 7-8 sessions, under $82 showed a profit. So I just think the shorts came in on this one.
All right. Justify this move in square for me. Q1 EPS 11 cents versus an 8-cent estimate. So that's good. Sales $489 versus $477 million. So that's good. The fiscal year sales guidance was raised. They raised it, let me see here, from $2.22 billion to $2.25 on the low end of the range that they gave. They reaffirmed their prior adjusted EPS guidance. Their Q2 guidance was good on sales and EPS. It was basically good all around, and yet here we are this morning.
It's just the appetite for lower PE stocks, and this doesn't fall into that category. Nice dip off the initial report, 67.58, and just your price discovery going on at $70 here. I'm going to use that 70 as a bogey in today's session. You had the low 69.79 and 70 even. Those were back in the middle of April. So hold at 70. You got a chance to rebound. Definitely resistance at the low and the close from yesterday, 73.17, 73.62. So hold at 70, important for this one, and needs to get off the mat.
It's funny because we tend to group Twilio and Square and those types of stocks together, and Twilio reversed.
Big time.
So
big time. Yeah. Just too much, too fast. It was kind of a sell everything market yesterday. The SPOOs and some of the Twilio and some of these stocks that had good earnings sold off pretty hard, which is not a great sign for the market.
All right, about 1 minute till we're going to grab our guest today, Marc Chaikin. Let's do one more quickly here. Which stocks do we want to hit? Let's do Fitbit real fast.
Okay.
Fitbit FIT reporting yesterday after the bell. Q1 adjusted EPS 15-cent loss versus a 22-cent loss estimate. Sales of $271 versus $259 million. So they beat on the EPS, beat on the sales. Q2 guidance that they gave, EPS guidance was light. Sales guidance was in line.
Got a spike, initial spike up to 579. That was stuff. 550 is going to be my number. You've had last 5 highs are right under 550, so under 550 has a potential for a little breakout here. And on the downside, I see support at 522, matching lows from yesterday. Actually, you had matching lows and matching highs this way. So not quite an inside day, but about 550. I like it. Under 522, could test the $5 area. Just kind of, this has really been dead money since 2017, since April of 2017. You haven't spent much time over $6 and not much time under $5.
All right, we'll be right back in a moment here with Marc Chaikin. All right, and as promised, we are live now with Marc Chaikin, the founder of Chaikin Analytics. Marc, how's it going this morning?
Very well. How are you, Spencer?
Doing all right. Give us your quick high-level reaction to the Fed yesterday.
Well, Jerome Powell did it again, somehow splitting hairs between transitory and persistent inflation. And when the market parsed that, took a big hit in the final hour, and I think that's very healthy. We haven't seen a meaningful pullback since March when the yield curve inverted on a Friday, and that turned out to be a low for the market. So I think the financials reacted pretty mutedly and nicely to, what in theory was a little bit disconcerting for the markets. I'm a big fan of the financials. The XLF ETF has broken out, finally joining the party, along with tech, to lead the market higher. So I'm looking to buy the major financials on weakness. JP Morgan's my favorite in the group.
All types of financials, large banks, regional banks, everything?
I think large banks, the insurance companies, and then some specialty financial stocks like MasterCard, which has been a favorite of ours here for the last month, where you're getting just a perfect storm of positive earnings surprises, new all-time highs, what I call blue sky territory where there's no overhead resistance.
Mark, I just want to get your real quick take here on the Tesla news this morning. You get an offering at 238. The stock traded up to 247.5 here. I know you haven't been really thrilled about this stock. The fundamentals are murky here. What do you think about this offering at 238 and the stock trading at 245.5?
Well, I think any rallies above 260 are saleable. It's a good spot in my view to put on some put positions. This stock has got more enemies than friends on Wall Street, and I don't think that's going to change for the time being. I think the max rally potential is up around 280, but I doubt that it gets there. I just don't see the buying interest, whoever's buying these convertible notes, which the convertible notes were the biggest part of the offering. Right. They were 2/3 of the $2 billion. So I'm not going to change my view on Tesla. It's nice that they got some cash, so they'll live to play another day. But that's right now for me. That's all it is. This is just survival until someone figures out how to make money at Tesla. And I don't think they're going to do it anytime soon.
If I can go back to the Fed here for a second. So based on what Powell said about inflation, I guess there was some talk that they could lower rates, but he seemed to squash that yesterday. So thoughts here on where the Fed goes through the rest of the year?
The Fed's not going to do anything the rest of the year. They're not going to lower rates. If there was even a prayer of that, President Trump's hectoring on Tuesday just put an end to that. I just don't. I think Powell is very sensitive to the perception that the Fed is politically influenced, and I think we're right where we should be. If you lower rates, you run the risk of overheating the economy. That's the last thing we want. We've got this slow and steady grind higher. People are calling it a melt up. I don't think it is. I think it's just sort of a grind higher with no overhead resistance for the the large caps in general, the tech stocks, the leaders in this move. So I think pullbacks are going to continue to be shallow. Right now, I think 2,900 on the S&P is about all you might see. And if we firm up today, you may not even get that. But I think the Fed, if Powell just keeps his mouth shut, is a non-event. That's what it's been now since January when they reversed course. And why he's parsing the difference between transitory inflation and persistent is beyond me.
I just want to touch just overall on the market. I was speaking with Christian Fromhertz yesterday, and it was before the Fed meeting, and he's kind of like, is it going to be like, your parents are out of town and, you're throwing huge parties and everything, and the market are the kids, and it goes crazy, and then the parents come home and they say, no, and they clean things up and they put everyone in line here. What about the scenario here? Because today is a real big day in the market for me. And the reason that being is, it was crazy after they came out super dovish, right? And the market was all over the place, but it bottomed right after that Fed meeting, and it turned much higher. To me today, and I'm looking at the low from yesterday, and I'm looking at the current pre-market low, I agree with you, Mark, if we hold today's low at 29.1550, but I don't know, after the run up, we take that low out, I think 2,900. Like, what's your next support level under that? Because I could see, if these lows from today not hold, I could see us easily trading into the mid 2,800 handle.
Well, anything's possible. I think 2,880 to 2,900, the buyers just come back in droves. I don't think this is 2017, but the advance since the lows in December looked like 2017. So what was the common theme in 2017? We never had a decline of 3%. So I historically have used the sort of band of 1.5% to 3% pullbacks in a strong uptrend. We're clearly in a strong uptrend. I think you'd agree with that, wouldn't you, Dennis?
I'm Joel, and Dennis always thinks we're in an uptrend.
Oh, Joel, I'm sorry.
It's okay.
Was I talking that fast? Was I talking that fast? Did I sound like Dennis?
No, yeah, I think we would agree with that, Mark.
So 3% puts you sort of closer to what you just said. If 3% is roughly a 90-point pullback from 29.50, so that gets you to 28.60. But
okay.
And you're in the period in May when things sort of flatten out after the April earnings season, which we had identified going in as very bullish week by week. So it's possible 28.60, but here's the reason I don't think it's going to happen, Joel. The market is still unloved. People are pulling money out of equities. They've pulled, $70 billion out of mutual funds and ETFs, equity, since the beginning of the year, and it's going into bond funds. So it's not as if the public is jumping into this market with both feet. The kids here are buying the new issues, by the way. That's a little bit disturbing, but not overly sensitive in terms of short term. You want to monitor that with the Pinterest going up like 7 days in a row, and a lot of interest in Zoom, and then the Uber coming up, and on and on and on with new issues. But the public has not embraced this rally, and therefore there's latent demand on the sidelines, in my view, and that's what you're seeing. Stocks go up, they don't come down after an earnings report. If the earnings report is good, stocks have tended to pause for a day or two at worst and then work their way higher. MasterCard is a good example of that. And there are tons. NXPI, just powerful. I think Apple's going to fall in that category. You got a nice little pullback in Apple yesterday on the market pullback. You went from 214.45 down to 210, and I think this 210 area is a nice buying opportunity. Our power gauge is not bullish on Apple, but you've got to acknowledge that it was a pretty good quarter, and the nitpickers will be out saying iPhone sales are dead, but they've got 500 million people in their ecosystem, and they're starting to buy services and wearables.
Yeah, I think we generally agreed yesterday that it was a good report, despite the low expectations for Apple. So, Mark, do I take that to mean that you're not going to go out and buy the Beyond Meat IPO this morning at $25 or $30 or wherever it opens up?
Not going there.
Not going there. I will
I'd
say,
love to taste the burger, but
yeah, I've had one. They taste incredibly good.
When did you taste one?
You can get them in Detroit.
Oh, really?
Yeah, you can get them around here, but it was really good. Mark, one thing I want to ask you before I let you go is you said you want to buy the XLF on weakness. What does that weakness look like to you? What kind of weakness?
It's 3 days of a pullback, and we thought the Fed might trigger some selling in the financials. It was pretty muted late in the day yesterday, so let's see what happens here going in. I'm more interested in some of the better names in the group. As I said, J.P. Morgan's just been outstanding. The insurance stocks have reported terrific earnings. Hartford yesterday, Lincoln National. There's a lot of names to buy here. Citi looks good with a bullish power gauge rating. But in terms of the XLF itself, anything close to 27.25, closed at 27.73. So a 1 to 2% pullback here, I think, is viable back down to the 21-day average.
And what's a catalyst? I mean, it's just because these are like value stocks. We've already had the earnings for a lot of these stocks. Is it the chart pattern? Because it doesn't seem like we know interest rates aren't going lower this year. I mean, I agree with you. I don't think they're really going lower or higher. But maybe he was saying maybe there's going to be one more bump in rates this year, right? So maybe is that going to be the catalyst here, or are you just basing it on the last earnings reports?
Last earnings report, the technical breakout in the XLF, which happened 2 weeks ago, above the 2,700 level. And the fact that we've got a very strong economy. Remember, people were looking for an earnings recession, Joel, coming into this quarter. 3.2% GDP, earnings may be flat to up instead of down 4%. So banks can make money two ways. They can make money in a strong economy where default rates are low and loan demand is high. The consumer is flush. Look what happened to Royal Caribbean yesterday. You know, those are consumers taking the cruises. And so banks can make money when net interest margin expands, which is what happens when interest rates go up, or they can make money in a strong economy. Now, their balance sheets are in great shape. The Fed has basically mandated that they clean up their act, and they have. And so I think it's a strong economy that drives it. I'd be shocked if we got higher rates, a rate hike this year. And if we got a rate hike, I don't think the market's going to like it, just like it didn't like the final rate hike in December. So if you got a rate hike, I don't think the banks are going to buck a downward trend in the stock market, which is what I think the reaction to a rate hike would be. So I just think it's a strong economy. Unemployment, we all know, is very low. The labor market is wonderful, and the consumer is flush. So that means lower default rates on things like student loans and car loans and so forth. So mortgages in general, default rate is way down. Just think this is a strong market.
All right, Marc Chaikin, Chaikin Analytics. Thanks as always for the time. Have a good rest of the week.
Thank you, and apologies, Joel. It's a little bit fuzzy here. I'm off caffeine for 4 weeks now, so it shows early in the morning.
Oh no, you're off the sauce. You're off the coffee. Why?
I just feel better. I feel better.
Good reason.
The ups and downs are not as prevalent. So sometimes you're a little fuzzy in the morning, though.
All right. Thanks a lot, Mark.
All right.
Okay, appreciate it.
All right, S&P futures, a little bit of a fade here, 29.2475, up $1.50, buck and holding the close. So we got the close. I'm still going to focus on the current low. The current low is 1550, 16 even was yesterday's low. I'm going to keep my bullish hat on because Dennis said I'm getting on my bear hat out again. I just want to preface that it is based on holding the lows from yesterday, which happened to coincide with the pre-market low.
All right, let's go back to the earnings parade. Under Armour this morning, full disclosure, one of the few individual stocks I own, reporting earnings this morning. Q1 EPS 5 cents. Sales of $1.2 billion. That is a slight beat on the estimate there. They raised their fiscal year EPS guidance from only by a couple cents, from 31 cents to 33 cents on the low end of the range. And they also raised their fiscal year operating income guidance by $10 million.
So that was Under Armour?
UAA.
Yeah, UAA, because I know.
Well, you can use either, but UAA is the more liquid.
All right, bad day yesterday, and we're turning it right around today. Little fears going in to report. You're getting a rebound or up $1.45. You're trading at the highs of the pre-market session. 2330 was rejected hard yesterday off the open. You also had a period where you went to 2341. And that fell off hard. So I'll tell you, this move's for real. You stay above 2350, above 2350. Let's see here. Next monthly high comes in at $25. But important to hold 2350 off the open. Let's see what kind of volume we have here to substantiate this move. UAA, 320,000 is traded. So let's see if people want to get back from yesterday's loss, right? Rebound right back to that area. So 2350 is what we're focusing on here in UAA.
What's going on with Wayfair this morning? Well, their earnings were not great. Q1 adjusted EPS of $1.62 loss, missed the estimate by 2 cents there. Sales of $1.94 versus $1.92 billion. So that is okay. I mean, a slight miss on the EPS and a slight beat on the sales number, but this is a stock that had run up. It held its gains from its last report.
Yeah, it has.
And you're seeing it down here this morning, 5%.
All right, they took it under 150 to 148.87. You're a good $5-6 above that now. So that low could be in there. I'm looking at the dailies here. And the low on that gap up day was 141.20, and then buyers really defended it at 144. So still, that's down $10, but still not close enough for to be on good support. Coming back, let's see, are we trading within? This had a huge all range yesterday. The close, wow, well, no, it had a $4 range. Long way to go to get to yesterday's low at 161.11. That would be your gap fill.
All right, where else should we go? Let's go to Teva. Teva Pharmaceuticals reported this morning. They reported Q1 EPS of 60 cents versus a 58-cent estimate. Sales of $4.29 versus $4.38 billion. So a mixed report. EPS beat, sales missed. They also reaffirmed their EPS and sales guidance for the fiscal year.
Quick pop to 1588, and that was stuffed out in a heartbeat. Pre-market low, 1450. Basis to daily charts. Got to hold yesterday. Got to hold $15 here, folks. 05, 07, the lows from the last two sessions, and I don't know, a lot of lows. 1470, 1480 here. So it's broken. It's down 22 cents, but I'll use 15 because you have two daily lows there, a couple closes. So 15, and if you get up anywhere near 1550. That'd be right in the middle of the highs from the last three sessions.
They are punishing Kellogg here this morning. Q1 adjusted EPS of $1.01 versus a 95-cent estimate. Sales of $3.52 versus $3.53 billion. So that's not a horrible report. They beat on the EPS, a slight miss on the sales. Their CFO is also leaving the company, and I guess they just don't like staples today.
Yeah, whew. This is a big move. It got under $57.
Yeah, for Kellogg, too.
Yeah, 55.84 is where this thing got to. Currently trading at $57, down $2.39. That is a big move for a food stock. My area of interest is 56.80, even though we did trade much lower than that in the pre-market trading. Earlier in April, you had 1, 2, 3, 4 lows right in this area at the 56.70. So I don't mind this. I don't mind this here. 57's a little high, but 56.70 looks like a good level. Big move for a food stock. And what do we have for volume here? Boom. Wow. Oh, only 7,000. So it's down on light volume. Let's see if they scoop this up off the open. Spoos are trying to stay green here, up a buck, 29.24.
All right, here's one not moving too much, but a big report nonetheless. Zynga Q1 EPS of $3.90 versus a $3.75 estimate. Sales of 37.9 versus $32.7 billion. So they also raised their guidance. So it was a great report. They raised their guidance, the lower end, that is, of their fiscal year net income guidance. It was a good report all around.
Down 50 cents, 162 even. So if you get green, you do have some room on the upside. Yesterday's high, 62.83, flat right now. So let's see which way they decide to take this one off the open. 158.29 was your low from yesterday. That's $4 away. So a lot of decision off the report here. Let's see what kind of volume we have. CI, boom, 9,000 shares have traded. Stock's kind of out of favor here, but if it could stay green, look for maybe a rally. 162.83 yesterday's high.
You know, we joked yesterday that or maybe it was the day before, that nobody was buying Tim Hortons. I guess they're all eating at Dunkin' Donuts, because Dunkin' Donuts reported this morning, good quarter for them, 67 cents versus 62 cents. Sales $319 versus $312 million. So beat on both of those numbers. They reaffirmed their fiscal year EPS guidance as well. Comps growth in the low single-digit % range. Good report all around, up a little bit here this morning.
Someone got real excited when they took this to 77 even. Not a lot traded there. Currently trading up a buck 53 at 75.08. On the dailies, I'm just going to call 75.5. I'm going to call that your resistance area. 3-day high, 75.37, and then 75.66. So just round that out, 75.5 as resistance. Recent high of the move for this is up at 77.36, but let's see what happens at 75.5. If it happens to go into reverse parallels, this is called 73.60, splits the lows from the last 2 sessions.
Here's one that we haven't talked about in quite a while on this show, Generac, GNRC. And you know what? It is May. Hurricane season is coming up here, not too far down the road. We saw, was it 2 years ago or 3 years ago when the stock really got popped on a couple of big storms? But they had earnings this morning. I'll read you those numbers. Q1 EPS 91 cents versus a 71 cent estimate. Sales of 470 versus $451 million. Also raising their guidance for the fiscal year. Good report all around. And is this a buy ahead of hurricane season?
Boy, 1,300 shares has is up $2.17. That's a big move. This one, historically, a lot of times has faded off these moves. We'll see what happens today. You're above the high of the move, 56.42. So as long as we hold 56.42, greener skies ahead here. On the monthly charts, boom, you have a wall of $58. 2 monthly highs, 57.80 and 58 even.
There's probably about 10 or 15 or 20 notable reports we haven't hit on. If you have any you'd like us to get to, please just drop them in the chat. We'll do our best. I see Cree mentioned in there. Let's go to CREE. They reported, I believe that was yesterday, it was Q3 adjusted EPS 20 cents versus a 16 cent estimate. Sales of 274 for that is in line. $274 million in line with the estimate there. The guidance that they gave was light for the EPS and light for the sales.
Interesting here. You had to drop, and you're continuing to leak here. But someone is out there. Someone has to buy the stock, right? And they're looking at your April 1st low of 57.36. I like it there. We'll see. If it gets to 57.36, maybe that's your first support area. Underneath that, I see 56.86. So maybe round a little bit, maybe at 57. But just quiet here. It's down but not out. So we'll have to see if it can rebound off. Down $7 here. What's the volume on this one? CREE. Down $7 on 12,000 shares. Seems a little bit much to me.
Let's go to retail this morning. We were there earlier. Let's go back with Hanes Brands, HBI, Q1 adjusted EPS, 27 cents, beat by a penny. Sales 1.58 versus $1.53 billion. So slight beats for both the Q1 prints. They also reaffirmed their fiscal year EPS guidance and their sales guidance as well.
Nice pop, up 86 cents, trading at 19 even, right at the highs of the pre-market session. You have a high sticking out here. Let's see if you can continue through 19. I see 3 highs in a row, 1937. So there's your next target on the upside. If, in fact, we can't hold this 19 and we start to leak, HNI, let's look at the range from yesterday. And what do you got here? Kind of a bad day yesterday. What am I saying here? Did I say 19? HNI?
HBI.
HBI.
Yeah.
What am I doing here? Like, wow, 19. I look at 36. Looking at the range from yesterday in order to fill the gap, 1850 was highs in the last 2 sessions. So old resistance will act as new support. And big number up there at 1937.
All right. Eventbrite. I'm sorry for everyone who bought this IPO late last year, but they are underwater. They reported earnings yesterday. Q1 EPS, 13-cent loss. Sales, $81 million, which is up from $74 million on a year-over-year basis. But
wait a second. This thing is down $7.80. You got to be kidding me.
Yeah, there we go. Look at that.
And look at that. Someone has the pedal to the metal here. Just a step down seller, relentless here. 1608 is your pre-market low. We're kind of hanging out at $16. The former low of the move at 1904. So 19 would be resistance down. Oh boy, it's a slacking. Let's see if it can hold 16. I'll tell you, shorts just must be burning in the streets on this one. That's probably who you have bringing in the stock. And do you know where this thing was originally priced at? Because
yes, man. I can. It was priced at $23, opened at $36.
Wow. 16. There it is, man. Let's see if the shorts want to bring it in there. Really, no sign of a rally yet. Resistance, let's call it 1670. If you get to 1670, you might have people, having to buy on into a rally as opposed to buying on weakness right here. But just sitting here, dead money. Wow, this thing got killed off its IPO.
It did. XPO Logistics was yesterday. So we're being asked about that one in the chat. So Q1 EPS for XPO, 51 cents versus a 41-cent estimate. Sales 4.12 versus $4.26 billion. So they beat on the EPS. They missed on the sales last quarter. Here's the chart.
Who liked this in the chat? Was it Ed Parker? I remember somebody talking
yes,
about
it was.
It was Ed Parker. Congratulations, Ed. I don't know what they're seeing in the report here, but who cares? Up 337. Pre-market high 71.13. And there's nothing in here. There's nothing in here on the monthlies, up to 79.27. XPO Logistics. This one got hit when they lost the Amazon contract, right? And now it's just kind of a slow recovery. Up $3.50 on 2,300 shares. So if any kind of sizable seller comes in here, look out on the downside. And what kind of volume do you have on this thing? On a daily basis, it trades a couple million shares. I tell you, I do like it at 65. A bunch of lows at that area. I don't know if doubt we'll see that today, but big pop and not a lot of volume. Spoos go red here. down a quarter here at 29.2275. So a little bit of weakness. We're all looking out to see what happens at that pre-market low, 29.50. Yesterday's low, 29.16.
Someone's asking, Joel, if you prefer AbbVie over Pfizer. We don't give outright recommendations here, but if we could, let's look at the charts of both. We'll start with AbbVie here and just kind of break this one down for us. And anything you like, and then we'll move on to Pfizer and see if we can find a stronger conviction in one or the other.
AbbVie is just hanging out here, just got several monthly lows right in this area that we're at. Well, I guess it's 75, 77. I mean, this 76 to 77 area, major support. So I don't mind this one here. Definitely fighting the trend, but the fact that you've had so many monthly lows in the same area may be a signal of a little institutional accumulation here. So it stopped going down. Does that mean it's going to start going up? I don't know. Pfizer, that got hit along with the rest of the sector, and has battled its way back pretty nicely here, trading up 13 cents at 40.90. Your high, you had a nice on the rally day. You had a high at 41.18 and now a high of 40.92. So bumped against 41 also on April 17th. So let's see what happens. So we'll get above 41, look for another leg up here. But it seems like, all the people that got caught in this downdraft in April caught it off the earnings on the upside. 41 seems to be a key level. SPOOs are leaking a little bit more here, down to $1.50, 29.2150. But I don't know if there's anything in the book there, but someone is targeting 41 as resistance in Pfizer.
I wanted to go to the ratings real quick because there was a couple that really interested me this morning. One of them is Scott's Miracle Grow. SMG is getting a downgrade this morning from, where are they? Bank America to underperform. And this is the second downgrade for SMG in the past couple of months. Raymond James downgraded them to neutral at the end of April. And this is one that got the pop
yesterday.
I was going to say last year with just the cannabis, stuff. Getting downgraded this morning. Underperform at Bank of America.
I still go with the earnings and that earnings gap in $88. It looks like 88 was the low from yesterday, 88.10. So there's your bogey, still $2 above it. It's hard to fight it until it starts to get into that gap area. For resistance, 90.42 was your close from yesterday, down 57 cents. Kind of respect this at downgrading it after a move higher as opposed to downgrading it when it's at the low of the move. But as long as it holds that gap area of 88, looks poised to go north. I'll fade that downgrade.
Marc Chaikin said he liked Visa. So does Goldman Sachs. They are reinstating their buy this morning.
Yeah, I wonder if that was like an analyst coming over from another firm or something. Yeah, reinstatement. Just for you're $3 off the high of the move, which was also the all-time high, 165.70, 165.74. Let's get a little bit closer here. We are taking out yesterday's low, so they're not really paying much attention to the Goldman Sachs move here. 160.40. That was a low before the earnings report, so that's I'm looking at for support. And then the all-time closing high, 164.43. If he managed to go green, I'd look ahead at that number ahead of the all-time high at 165.74.
This is weird that you pointed out this morning that I didn't know was a thing, but Uber is getting two initiations this morning. One at neutral, DA Davidson, one outperform at Wedbush. I guess they've obviously seen seen the filing, and they've obviously seen the financials, but I didn't know this was the thing that you could do.
Yeah, no trades as of yet.
No trades. They're not even open.
So I can't really fade that, or I can't really give any technicals on it. But,
no. All right.
Let's check. Let's just check Lyft. How's Lyft been doing here?
Oh boy.
I just want to check this. Oh boy, hanging out near the lows of the move here. Whew. I don't know. Let's see. Resistance. We snuck over 60 a couple times. So 61 is your major resistance. Just hanging out. We'll see See if you can get down to that low, 54.32. That's the all-time low for lift. So lift not getting a lift.
All right, I am going to ring Dennis Dick right now.
No, really?
He says he's feeling okay. He says he's feeling better. Let's find out if he was lying or if he just wanted to. Dennis, are you with us? Are you okay this morning?
I'm with you. I am with you. I am somewhat surviving. Bad stomach flu here overnight. Was up a lot of the night there. Daughter had it a couple days ago, so I think that's where it came from. But fighting it here a bit. I got positions on, so I got to trade anyway. So anyways, show must go on. So sorry I missed you guys for a little bit there. I'm fighting this, so I'm going to fight through for you for the next 10 minutes, though. So I've been listening, though. You guys do a pretty good job without me.
Oh, gee, thanks. Thanks.
I mean, we
Maybe
actually,
you
Thanks,
don't
Dad.
need me anymore.
Thanks, Dad.
we actually have to talk. I mean,
And there's nobody interrupting anybody. So nice. It's nicer to listen to.
That's true. There's definitely no one to. Yeah, I don't have to repeat myself 4 times.
so are you dumping your Tesla into this, Dennis? You getting a little pop?
I've been out of Tesla.
Oh,
I sold it there. I sold it last week.
Oh, okay. You sold
So
that.
this is the bottom now.
Oh, you sold. Okay.
I'm all out. So this has got to be the bottom, right?
Yeah. What a weird move, huh? Off that 238 offering.
I mean, it always does. This is a stock that always moves in an unexpected direction. So obviously, you get an offering here. You think the thing's going to be down on it. Initially, I think it was. There's headline bots that are trading on the headlines are getting rocked on this again here. What was the low? Like right on that news, Joel. Just go to pre-market and tell us. They did hit it just quickly initially, and then they bought it.
We got it. This 7:15. So what time did the news actually
Right
come
around
out?
there.
Yeah, 230.50 is where
So
you got
down
to.
about $4.
Yeah.
So the headline bots hit it, and they're immediately underwater. And obviously, it's a big pop. The media will justify that Musk bought more stock. I mean, media always finds a way to fundamentally justify a move, and regardless. So Musk bought some more, so that's the vote of confidence, and that's why the stock's trading up. That's what they're going to say anyways. I think it just does its own thing. Tesla's a weird stock to trade, and maybe it's a stock not for me. So I am fully out of Tesla. Obviously, I sold it multiple times there on the small position that I had, but just the story just seems broken to me. So maybe it's going to come back up. Maybe this is going to be the low because I'm finally out of it. And but it was a small position. So these things happen. You got to eat the losses. When you're wrong, you got to admit you're wrong.
All right, Joel wants to look at U.S. Steel. They're due to report today after the close. What exactly do you want to look at?
No, someone new in the chat here asked about it.
But Jared's asking about it.
Oh, okay.
Yeah, Jared. It could only be Jared. I don't know.
Just straight down.
I
mean,
know.
this stock has been down forever. It can't catch a bed. Nucor is still best of breed, and it's starting to break down here too. Steel stocks do not look good. I mean, AKS, you can keep looking at them here, and Steel Dynamics as well has been breaking down. This is worst of breed. So when steel starts to roll over, this one gets hit the hardest. If it does start to rebound, the betas are higher on this. It could, but I mean, the trend is not your friend. There's a million people underwater. It's very difficult to call where this thing is going to bottom, if it's going to bottom at all. I'm long Nucor Steel. That's the one I've been in for a long time. It's got the dividend. It's a safer play. So if you're playing steel, I like Nucor better, but I don't know if I want to play steel at all because they're all breaking down.
Trading at the lows of the move here, basically. I mean, what can you say? 1527. That was the low of the move yesterday. A couple other lows. Looks like you've been trying to find support here in the 1550 handle. Your next monthly low doesn't come in till 1392. I guess if I had been short this thing, which I was a while ago, like in the 40s, I can't believe I ever covered that. But I don't know. Maybe if you're waiting for a flush out off the report, maybe get 1372. But I don't know. I mean,
reports tonight.
It has in this one historically. It just has wild. I mean, it makes a bunch of money, loses a bunch of money, so doesn't look like the tariffs helped out.
Trend is not your friend. Even if you get the
go.
pop, you wonder how long it can hold on for. I hate fighting the trend like this. Stocks making new lows. I always say you have to go hold it through the report, and maybe it bounces. It's always a coin flip holding earnings through a report, but chart is just ugly.
Yeah, there's nothing else to say about it.
Yeah. jump over. There was 234 stocks reported today. I was listening to you guys for a while, so obviously you guys covered the bigger ones. Is there any other smaller ones that you wanted to go into? Did we talk Qualcomm?
We did talk Qualcomm. You want to give us your 2 cents?
Just interesting. Buy the dip all over this. There's 2 analysts that upgraded here this morning. This was trading down to 82 handle last night, and the stock is loved right now. So, even though, for whatever reason they headed on the report, the good ones don't stay down long, and this couldn't even stay down for the entire after-hour session. It was already starting to come back. Then pre-market get a couple upgrades, and it's trading in the green. So just caution. I mean, it's going to be wild after the report here too, but it just as opposite as the U.S. Steel is. The stock is just hot right now. I think it's eventually $100 stock, but I don't know the path for it to get there. Is it overdone? Has it really had a big move here? Yeah. But when they bought that earnings, right back, where did it get down? Like 82, didn't it, Joel? Last
It
night?
actually got the initial spike took it to 81.75.
Yeah, if you're just sitting out there, these are the kind of stocks you want to buy on dips, as opposed to like trying to buy U.S. Steel on a dip that just keeps dipping. I mean, it's a strong stock on the dip. That's the way this market has worked for a long time. It's buying the strong stocks on dips, and that's what happened last night in Qualcomm. It's right back up.
Dennis, I want to get your thoughts here on Square. I guess their Q2 sales guidance was a little bit light, but overall, that was a good report. There's nothing they could have said that would have made
report on the wrong day.
That would have made it go higher.
And when we talked about it in the pre-market, stocks were basically sitting up at all-time highs. We had a really rough day yesterday for the markets. It was Momo was coming off, and you reported on the wrong day. So if it would have reported on a day where they were loving Momo stocks, the stock could have actually been higher. So, people will say, oh, this or that. They want to justify fundamentally. Flat out reported on the wrong day. Everybody was selling Momo yesterday. They report, it isn't blowing it away, and they hit it. But it was nothing wrong with that report. And it's not surprising that they are buying the dip. This got down to 68 handle last night, already back up at 71. So I think, this could potentially hold 70. We'll keep an eye on it, though. But the only thing overall, caution here a little bit, because we have seen moves, and usually when you get a big, move, and I was off the Fed yesterday, obviously, but when you get an outsized move and a move in the opposite direction, it usually doesn't fix itself in a day. Usually you get the 2-day follow through. So I wouldn't be surprised if you see some significant weakness here, at least off the bat. You know how I always like my 2-day move. 2-day move would say to, be short overnight and then cover potentially into the weakness of the opening move if we get that. But I'm cautious on the Momos here this morning. Some of them are trading in the green, but it was an ugly candle yesterday, and you could see some follow through. Johnny come lately is maybe ringing the register to book some profits.
All right, we'll do a couple more here. We'll do SSYS and we'll do Intel. So SSYS had earnings this morning. Q1 EPS 10 cents versus 6 cents. Sales $155 versus $152 million.
Hard to get excited about this stock. It's been a dog for a while. I mean, really go to the weeklies, it's gone nowhere for a couple of years. If you go to the monthlies, it's really obviously gone down in the last 5 years. We were 120, 130, 14, 15. We tried to claw our way back in 16, 17, 18, 19, but every time this thing starts to mount a rally, it just seems to get met with more sellers. There has been some tradable rallies in there. I don't know if this is going to be one of them. I see a lot of overhead resistance up here in the 24s.
Yeah.
Still a coin flip on some of these things. Do they get the follow through or don't they? If it starts to leak, just be careful, because this is one that could give it all back if it starts to leak.
Pre-market high, 24.19. Not up on much volume here, but I just see 3 highs right at 24. Let's call it 24.65. That's the area of 1, 2, 3, 4, 5 highs back in mid-April.
And then Jar is asking if Intel is getting ready to. People are getting ready to buy the dip. Intel. There's nothing from this chart that would
dead
indicate.
money right now. I'm long it, and obviously I should have sold it prior to the earnings report. It's dead money. Everybody's underwater in this thing. Any rally's probably going to get sold. I think actually talking against my book here again, but I think the path of least resistance is down. It's in my long-term investment portfolio. I'm going to stick with it, but it doesn't look pretty. So I don't see any reason to be a hero. I don't see Intel turning it around anytime soon. I mean, they sold the AMD earnings hard. So yeah. AMD got a nice spike up on its earnings report after hours, almost touched $30. They sold it all day yesterday. It's lifting a little bit here in the pre-market, but that is an ugly candle for AMD. The chips are hurting right now. I mean, there is a few that are holding on, but Applied Materials is starting to leak. Western Digital was leaking. It came back. if you just look overall here, it started with Intel and now AMD leaking too. I don't know. I'm not a fan of the chips right now. It's a tough market. I mean, Joe put his bear hat on earlier. And I'm not saying I'm getting full bearish here after one day, but I think it was a little bit of a wake-up call a little bit yesterday. I think you got a few probably nervous people. I was sitting, I mean, we're up so much. It's not like we're going into a bear market here, but come on, we're up like 30, 40% in a lot of stocks this year. It's too much too fast. Maybe it needs a little cool-off period, and maybe the Fed's going to give you that. I mean, we saw it with the banks yesterday. I think a lot of people are probably surprised that the banks sold off yesterday because the Fed is, potentially not or looking a little bit more on the hawkish side of it. That should be good for banks, but they sold those anyways too. So, I mean, it's a difficult market to just come in here and say, okay, we had a 1% pullback here. Let's jump in, and because we know we're going higher. I mean, that has worked, but let's put it in perspective. We are up a lot in some of these stocks. We could have a 4 or 5% pullback here, and all these stocks are still going to be an uptrend. So I don't know if you need to hurry in and buy stocks here. Just my opinion.
I just want to preface that I was banking on yesterday's low, right? Because remember, after the last Fed announcement, we kind of hit the market and then just turned around and went right back up. So yesterday's low 16 even, the current low 15.50. So that's what I'm banking on to see if you get a little bit more of a correction. But Triple D, I'm glad you were able to come on for a little bit of the show.
Yeah, I'm fighting it here a bit. It's stomach flu here overnight, so I got to trade out of these positions. I'm probably going to try to get a little bit of rest today. I got a few positions on overnight that I got to work out of. So yeah, so it was. It's always fun.
Sound good.
I can't stay away from the show.
Trade out of the flu if you can for tomorrow's show. That'd be nice.
But, we're gonna try.
All right, on tomorrow's show. Speaking of that, we will be joined by John Inch, multinationals analyst at Gordon Haskett, breaks down GE for us. So he'll be joining us tomorrow at 8:35. If you missed any part of today's show, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Don't forget about the Benzinga Trading Summit, June 20th in New York City. Joel and Dennis will be there, as well as many other traders across the street. BenzingaTradingSummit.com. PMP15 is your promo code to get 15% off of that. Thanks to today's guest, Marc Chaikin. Thanks to all of you in our chats. Please remember that all of the information from our show is for informational purposes only, not meant to be investing advice. Hope you all have a good rest of your day. We will see you on Friday.